Today is tax day here in the U.S., and there are plenty of people rushing to file before the midnight deadline. But are there ways to use today to your advantage for your retirement tomorrow? Joining us to discuss is CEO of Hobart Financial Group, Chris Hobart. Chris, thanks for joining us. And I guess I would just start by asking, when you look at the menu of things that folks need to do when saving for retirement, how important to you is keeping in mind the tax liabilities or the tax benefits, the tax portion of that future retirement?
I think it's incredibly important. You know, if you really look at it, we always worry about healthcare expenses in retirement. We worry about housing costs when we're building our retirement. But the reality is taxes are just as big, if not a bigger expense throughout our lifetime. So it's essential. And the other piece of that is most Americans spend their whole lives building up tax sheltered vehicles, IRAs and 401ks. And in that process, while it's great, they're building a future tax liability. So to ignore taxes in financial planning is an absolutely huge mistake, because you're simply, quite frankly, allowing yourself to be whipped around by whatever the government says you owe. And a lot of times we like to talk about being tax proactive or tax planning, which is not asking how much do I owe, but instead asking the question, how do I pay less? The same question that Warren Buffett asks all the time, which is, how do I pay less taxes? He can complain about taxes more than we do, but that's a good question to ask.
Well, and speaking of the government and some of those policy changes, obviously 2018 has been a very chaotic year for a lot of folks, whether they're a high net worth individual or someone who's making $20,000 a year. A lot of questions about what taxes actually are this year, who owes what, who's owed what. What kind of things have you seen among your clients in the last few months as people are filing for 2018?
You know, we're seeing a lot of people surprised. I think many people heard tax cuts, and their initial thought was, hey, I'm going to be paying less in taxes. And I don't think people came to the realization that those tax cuts, there were trade-offs in there. So a lot of people that were itemized deduction folks, they're now standard deductions. So great, higher standard deduction, lower tax rates. But many people were finding out that with being in that standard deduction zone, that they weren't getting the write-off for their mortgage interest, and they weren't getting the write-off for their charitable contributions, and state and local taxes weren't part of their write-offs anymore. And I think people thought that they were going to be getting their taxes this year, and it was going to be a significant difference. And I think a lot of people are kind of sitting there saying, I guess it wasn't that big. Now, obviously, on the business side of things, I think we're seeing bigger areas in the business side. But when we're talking about people and individuals, the tax law changes really, I don't think, are about today as much as being able to plan for the future.
Right.
Because we all think that in the future, taxes will go most likely up.
Yeah.
Now, we can't say for sure, but if they do go up, these lower taxes are a great opportunity for people to be cleaning some of their tax hostile investments, things like IRAs, 401ks, so on and so forth.
So let me ask you, just getting back to the surprises that some people have. We were just talking on the desk here about withholding and people not having the right amount withheld. Are you seeing that a lot for your clients? And can people change their withholding to sort of true this up going forward?
They can. That's a nice thing. Tax planning shouldn't just happen today. It's April 15th. Everybody's thinking about taxes today, but the reality is taxes should be happening throughout the year. And when we're talking about withholdings, typically, if you're currently employed, you can be changing those and should be changing those throughout the year if your tax situation's changing. And I think that's the key here, is most people don't realize that you can make adjustments. Sitting down with somebody that's educated in taxes allows you to understand your taxes and then begin to adjust your taxes throughout the year, or what your withholdings are throughout the year. The last thing you want to do is ever get too much back or owe too much next April 15th.
All right, Chris Hobart of the Hobart Financial Group, thanks so much for joining us.
Thank you.